Okay, so now we're going to talk the Eurozone, and I'm joined by Alistair from Currencies Direct. So Alistair, there's lots to talk about in the Eurozone, but I just want to figure out if it's actually important or not. Obviously, we've got the political situations in both Italy, where the coalition government's looking quite shaky, issues with Berlusconi, and also over in Spain, again, the government's looking quite shaky there. Are these issues which the market actually cares about?
In a word, no, not at the moment. And the reason is because the ECB has in place the OMT programme, the big bazooka, that they are willing to step in and backstop these governments if the market loses confidence in them. And the market knows that the ECB is there, and so they're paying very little attention to it at the moment.
But surely if Mariano Rajoy's government tumbles, then that's the third largest economy in the Eurozone, and suddenly it doesn't have a government. That's got to have a real material impact on the euro.
Well, in theory, you're absolutely right. But in practice, in terms of economic policy, whoever comes in, and it would be a swift transition, one would think, they're going to have to pursue exactly the same economic policy that the current government has at the moment. So, in terms of the overall outlook for the country, nothing really in terms of what the market views Spain as doing in the next 5 years will change at all.
Yeah, so what about Italy then? So I made a mistake. It's Italy that's the third largest economy in the Eurozone. Yeah. What happens there if we get fallout from Berlusconi, if he's not allowed to stand for office anymore, Enrico Letta's government starts to fall over? Again, surely we have to see some impact.
Yeah, first of all, with Berlusconi, we've been in this situation for the last, 10 years? Government after government has fallen and been reformed. The real worry for the markets is if the five-star movement were to get in power, because politically, what do they have behind them? Almost no history. Nobody's really sure what their policies might be. For example, there's a bit more uncertainty about what they would do in government. But again, whether it's Berlusconi or whether it's a technocratic government, really makes no difference in terms of the market, because, and that's a big because, the ECB is standing ready to intervene if needed.
So all this means a very flat euro, does it?
Yeah, very little for the euro. What's more important is the forward guidance that the ECB are about to announce, or more details about the forward guidance they're about to announce on Thursday.
Well, that brings us perfectly on to the ECB meeting.
Yeah.
It would take a very brave person to predict that Mario Draghi is going to pull a rabbit out of the hat and introduce a rate cut or something similar. Do you believe that there's going to be any action on Thursday?
No, but we want to see more detail about what the announcement last month is going to look like. How long are they going to keep rates low for? Are they going to tie it to any economic variables like the Fed, like unemployment, or whether they would abandon it if inflation started to rise? All these sorts of actual meaty information that we need to find out. What happens usually is the ECB announce something, and then over the next month you actually find out what's going on, and we're really looking forward to that, because that's going to be the main determinant of the euro and sterling, because the Bank of England are also going to do this, and that's fairly large implications going forward for the euro against the dollar in particular.
This is a question which really applies, I suppose, to the Bank of England as well as the ECB. What tools are there outside of just rate cuts? Because it seems, or QE, because it seems both are quite unlikely for the central banks at the moment. So what other tools could they be using?
Well, the forward guidance is what they've both announced, and what forward guidance is they're going to specify, say for a year, that rates would be low, or they're going to tie interest rates to the unemployment rate or some other economic variable. So they're called intermediary thresholds in technical speak. And what that means is that the bank is just committing to do something for a preset period of time. And that's a big change, because the Bank of England and the ECB, they've never before have they pre-commit to monetary policy. Now that's a good thing for the economies in the Eurozone and Britain if what happens over the next year doesn't force the Bank of England into changing that policy at all. So they've got to be lucky effectively over the next year, if they're going to announce forward guidance, that actually plays out as they expect. Because if, say, inflation rises too high or the economy starts to really recover, they're going to have to change it. And that's not the credibility of a central bank is one of their main weapons.
Yeah, so what about Mark Carney? Are you expecting him to announce any further QE? Because that was his kind of Superman status that he was given when he came in, that he was going to blast more QE, but that doesn't seem like an option now.
No, I think last month was quite telling, because he could have announced it then. I actually think that's probably unless something catastrophic happens over the next 6 months, I think that's probably the end of QE and the asset purchase scheme for a good while, probably until they start winding it down now. So it's going to be forward guidance that is the main policy tool going forward for the Bank of England.
Yes, so let's talk some rates, starting with the euro.
Yeah.
How do you expect that currency to move over the coming months?
Well, if we look particularly against the dollar and the euro are going to be the key currencies here. So the dollar, if you look at the Fed, they're going to start to taper in September, according to the market. It could be slightly later, depending on what happens. That has some fairly large ramifications for the US dollar going forward over the next year, say, because they're diverging in monetary policy from the ECB and the Bank of England. So for the currency, that means dollar strength, which means euro weakness going forward, particularly against that currency. And also for sterling, it means dollar strength against sterling going forward.
Yep. So in terms of that key euro-dollar rate, are you expecting it to fall below 130 then?
Yeah, absolutely. But this is going to be a long, drawn-out process, and it is dependent on what the Fed does, because I think that the ECB and Bank of England's hands are going to be played on Thursday. You'll see the rates move about then, and then over the next couple of months, it's all going to be about tapering again.
So by the end of the year, do you think we could be seeing the euro-dollar at 120, at 115, at 125?
Well, if we go back to your original question to me, so we're talking about political situation in the Eurozone. At the moment, the market does not care about it. That could change. And it also has quite big implications for euro-dollar, because if the dollar is strengthening significantly and the spotlight comes back onto Europe again, for euro-dollar, I think that has the potential to sort of drive it down significantly as we move towards Christmas, should that happen.
And what about the sterling? Do you see downside or upside there?
Well, that's a tricky question. I think near-term downside myself, because forward guidance is negative for the currency. Going forward, the economic data is better and is improving slowly. The GDP number last week was good. Importantly, services, construction, manufacturing, they all posted positive growth figures, so they're all combined together, giving us, a more balanced growth set. Not perfectly balanced, and there's still room to do, but pretty good. So over the medium term, I think, especially against the Eurozone, which is still fairly, as we've described, it's in turmoil effectively still, it should be reasonably good for sterling going forward against the euro, but not against the dollar.